reserve assets.
For every family in this country, the stability of the banking system matters.
The ECB is ready to do whatever it takes to preserve the euro.
Where does it come from? Do you just print it?
We print it digitally.
And there is an infinite amount of cash at the Federal Reserve. We will do whatever we need to do to make sure that there's enough cash in the banking system.
The government definitely prints money, and then it lends that money by selling bonds. Is that what they do?
I print banknotes. In my office, I print banknotes. And with these banknotes, I will buy you something.
It's a great business to be in, central banking. You print money and people believe it.
Oh, guys. Classic CTM over here. Let's just back this up and start over. Bitcoin is running $99,560,000. That intro is a great reminder of why we're here. We are fighting to survive. We are fighting to thrive and protect and help all of those around us. The party is just getting started. I'm not talking about the price of Bitcoin. I'm talking about the printing that will come to keep this Ponzi going. Next week, we'll get into it a little bit. Before going live, I went ahead and I posted this chart over here. 80% of all dollars were created in the last 5 years. It's only a matter of time before this chart over here looks like the peak of 2017 on a Bitcoin linear chart today. And I'm referring to this over here. And if you remember, when we were in 2020, and this is how linear looked, I said soon this peak over here is going to look like this peak down over here. You remember that? And then here we are today, and we could see that Bitcoin is running, and now the 2017 peak is looking a lot like it. It is because they keep printing and running the printer to keep the Ponzi going. Eventually, this peak over here that we saw from the 2020 global lockdowns is going to resemble this peak over here. Next week, we'll be taking a look at the stock market. We'll be taking a look, just building off of last session that we did, talking about after the S&P has had two back-to-back 20% gains in a row. It's only happened three other times in history. And we're looking at what comes next in 2025. 2026. I talked about what my own expectations are, but regardless of my expectations, we're going to make sure we do what is right to stay on the right side, talking about how we reviewed the Wyckoff accumulation, not distribution, inverting this. The distribution was a reverse accumulation pattern. We did that in real time, and now we say, well, I expect that we're going to run over here. But you could see that since we last looked at this, the LPSY is now being put in. The break above the resistance over here. If we are indeed going to see any type of fade back down, we want to make sure that we are, regardless of what our own expectations, the seasonalities that we're currently running and whatever have you, that we stay on the right side. So we'll be taking a look at that next week. Right now, let's focus in on Bitcoin. The purpose of today's session, this fun Friday, is to talk about Bitcoin. A lot of people are expecting a potential peak in the first quarter of 2025. They're seeing altcoins beginning to run and said this only happens at the end of the cycle. Well, I don't agree with that whatsoever, or even think that altcoins are even running right now. It's usually that brief window where altcoins really the magic happens. And I know that you've seen it before. Day after, it's unreal. Seeing coins go up 10, 20, 30% day after day. It's unreal. Will it happen again? Markets are markets. Speculators are speculators. Or we're going to talk about today how to spot a cycle top or a potential fake out. And or if we're running into something like the mid-cycle dip. Now, the mid-cycle dip is not something that is a given. It may or may not happen. We've seen it before. It's happened before. You remember when I called the mid-cycle dip over here in 2021? $50,000, price came down to $30,000. A lot of people didn't know what to do. This is when we talked about the mid-cycle dip, and then we did have the new all-time high by the end of October. Another famous, infamous mid-cycle dip. Now, there was no mid-cycle dip prior on the run-up over here, but this is the first run-up. You're not mid-cycle. Cycle's just beginning. There was no mid-cycle dip over here, and I don't think this is mid-cycle dip. Maybe in retrospect, it'll turn out it was, but we had that quick run-up. We'll take a look at that. But this is the famous other mid-cycle dip over here, all the way early on in 2013, where Bitcoin mooned, draw down 60%, consolidated, and then mooned again. We'll be taking a look at what potentially could happen going forward into 2025. My expectations, of course, as you all know, is that we are entering jump the chasm, this being the chasm between early adopters into the early majority. The early majority is here. If you see right now, by the way, let me just jump over to this slide over here. We are seeing US spot ETFs have passed Satoshi's wallet, Satoshi's holding over here on Bitcoin held. Now they're more than 1.1 million. More than anyone in the world. And they're just getting started. First year, mind-blowing. You could see over here that we have MicroStrategy on the bid, continues to be on the bid. US government and the Chinese government are basically neck and neck over here at 198 and 194,000. Would love to see more nation states up here in the future, as well as seeing the US and the Chinese increasing their holdings. We talked about yesterday what would be the inflows as Bitcoin popped above $100,000. We saw a decent amount of inflows. Hey, a cool $766 billion. Whoa, Jordan, hold on. Walk that down, talk that down a little bit. 766,000 million, trillion, billion dollars. I can't even say numbers over here. How about this? 250 million shy of a billion. You can see over here as the total inflows continue to grow. I want to just walk that back over and talked about what happened as Bitcoin was going ahead and breaking above the 100,000. We saw the quick move into 104,000. It felt very good. And then very quickly, we had a $10,000 candle straight to the downside. Here's what that looks like from a CTM view, by the way. Let's move over here. And I'm trying to find the slide. There we go. Look at that. We did take, like, the wick took out our structure, or my structure, right? Our structure. It did take it out, but you know, nevertheless, liquidations will do that. There was over $1 billion of liquidations. Nevertheless, it still held. I mean, it took it out from a precise, exact standpoint, but it is still held over here. Bitcoin here looking extremely healthy. In the past, when Bitcoin took out 1,000, you saw a sharp move up, sharp move down, and then again, the second time, it's resembling the price action we're seeing now with the sharp move down and then resuming up. Once it takes out that high, it began to really run. Then you could look at what happened as Bitcoin took out 10,000. Very similar price action, again, as to we're seeing right here, right now. And when Bitcoin began to hold, it began to run up. What you're seeing happen around that, look, this is 100,000, what just happened, compared to the $10,000 wick. And once it's stabilized, you can see it then running up in the past. Now, that doesn't mean that it's going to happen once again, but likely, and maybe it will. Ace. What am I missing? Beautiful to behold here as we are above $100,000 once again on the Bitcoin. I know that this morning, Ace Aldo was wondering if we were going to get it. We're here right now, and it's beautiful. I'm glad that you called my attention to it, and we got to see we are looking at 100K. As far as Ethereum, I was talking about next week getting into the stock market. We are also going to be getting into on Monday Ethereum, more from a CTM perspective and what we're doing and what we need to do. We saw over here though the flows into Ethereum ETFs are now increasing. I remember it was not too long ago. It was only a couple of weeks ago. The total flows into the Ethereum ETF were minuscule, absolutely abysmal. At least now we're starting to see people stacking into the ETFs over here. We're watching over here as Ethereum shorts triple down, going into a blaze of glory as put by Zero Hedge. Ethereum's at 4,000. Not much glory as the shorts are ablaze. And you could see here, Ethereum potentially trendline break. Also looks like a cup and handle. Trendline break, breaking out right now above 4,000. RSI looking for the breakout. It looks like Ethereum is setting up to get ready to run right now. So we will be looking at that next week in more detail on Monday session. Right now, we're focused here on Bitcoin, and we want to see and talk about what is going to happen here as Bitcoin heads into the first quarter of 2025. Many people, not everyone, of course. There's many different views. My view is I have expectations, and at the end of the day, I reserve the right. It's not even a right. It's essential to be a trader and or investor to be able, when presented with new evidence, to change your mind in an instant. There's no other way that you could be successful. Now, we refer to the technicals and staying on the right side. Anytime there's a technical breakdown, if you remember what we did over here, well, it was, we saw in the end of July, we had the Japanese yen unwind. And if you remember 60, I don't remember the exact number. I don't know if it was 67. I don't know if it was 68. I did a whole Twitter thread on it. As we broke 68, I called the big technical breakdown that was occurring over here. Price came off from that point, más o menos, right? 20%. I think that was the largest drawdown actually on Bitcoin. And I'm looking at a 3-day closing basis. Intraday, it was, I don't know, it was over 22%, might have been 28%. I think it was 28%. If anyone knows what the drawdown, please let me know. But that was being on the right side at the right time. Any way you look at it. In September, put out the video about Bitcoin, looking to do Bitcoin things, getting ready for the massive hyper wave to come in. That's being on the right side. Some people look at this and they focus on when I called the breakdown and they're like, oh, I'm not trying to please anyone. I'm trying to continue to put the work in and do what's needed for us to stay on the right side, to navigate these markets, and to do it to a degree and on a level that is simply unheard of. That is what we do. Now, my expectation, and briefly, I'm not getting into it, is that as we've entered into this portion of the S-curve, where we hit the early majority, that we enter the ultimate market opportunity, and we are going to see lesser drawdowns than we saw even last cycle. And you could point, I'm going to point to, we went from 85% drawdown to 84 to 76. It is the trend. We are seeing diminishing drawdowns occur. I expect that we see something similar to this. Hype phase, facing reality, ultimate market opportunity. By the way, as we enter that ultimate market opportunity, we have on Amazon, you see the structure even from the hype phase. Same thing on Bitcoin. It continues throughout. On Amazon, we hit the upper end. Not the highest level, but the upper trenches of the structure. That would be massively beautiful if that were to occur on Bitcoin as well. Of course, it's dependent on the continued adoption of Bitcoin, but we are clearly seeing some major dominoes fall over here. We are seeing major adoption coming on a larger and bigger scale. Retail is irrelevant this cycle. They're not irrelevant for alts, and there will be plenty of speculative play in alts. And if we see some type of play like this, where the high, which my expectation is the high for this cycle, is going to come closer to that 2028 halving than it does over to here in this area. That's my expectation. If we have a technical breakdown and things change, I hope to be on the right side of it as early as possible. Don't get stuck. It's why we show up every day and we put the work in so that we could stay on the right side. What would that look like right now? What would a breakdown look like? I mean, I'm freeballing here. This is not getting into the presentation, but we want to stay above this line over here. Like at least if breaking below this trend line, that would signal that something's off. Now, if we start ascending higher than expected, then all of a sudden the potential breakdown or sell impulse would change. Now, again, it's completely variable and it will continue to be variable as we continue forward. Let's go on and take a look at some of the things that I want to get into today. And we'll start over here right now with TXMC. Bitcoin on chain spending velocity is picking up with value days destroyed multiple currently at 2.4. This metric nailed the quarter one peak with the rare, highly accurate 4.1 print. We'll be observing closely in the coming weeks for overheating here. Now, a lot of people might get confused if we were to see some type of overheating into the first quarter of 2025, with that being the cycle peak. And the reason they might confuse it, and they might be right, it might be the cycle peak. One never knows. But if you look at past cycles, you could say that, well, this is the halfway point. We peaked on this side. This is the halfway point. We peaked on this side. This is the halfway point. No, we did not peak on this side. A lot of people get very confused about where we peaked. We peaked on this side. A lot of people get very confused. And because of that, a lot of people think that the peak should be coming, here's the halfway point, somewhere over here. And they're looking for it and they're ready for it. By the way, monetary policy does not even align yet. Fed just began cutting. QT is running. The next phase of the Fed cycle, in my opinion, is that the Fed is going to stop quantitative tightening. When they stop quantitative tightening, either the balance sheet is going to pause and stay level and or begin slowly increasing. If it begins slowly increasing, that should be super conducive for risk. We should be seeing risk run, and likely it'll be equities first, but Bitcoin has got a massive bid in it, and it's a lot different than past cycles. You could see the bid over here as price made the new all-time high before the halving, not after the halving. Now, let's continue with the conversation. Would it be unreasonable to see at this particular point in time Bitcoin get overextended? It did recently in March. Remember in March over there? By the way, from a discretionary standpoint, we just simply said, hey, listen, I would not be surprised to see Bitcoin begin running sideways for a while. TXMC is looking at that from an on-chain perspective, and he's saying the value days destroyed multiple hit the rare 4.0 print in this area over here. Now, there are other times that it hit that print, right? You could see it nailing the top over here in 2013, the first top, then the mid-cycle dip, and then you could see it nailing the second top over here. However, in 2017, this was a massive bad print. It wasn't accurate at all. It was way off. Printing at around $4,000, Bitcoin then 5x'd over here in a matter of months. So that's way off sides. Now, potentially, that signal could be used in other ways. When you get to the 4.0, maybe that's the time that you want to be leaning into the technicals a little bit, which we're going to look at next. Then you could point to over here in 2020. This is not even 2021. This is December 2020, I think. Well, don't think. Let's know. So, that's that first peak here. All right, January the 7th. That was very close. 40,000, first week of January. January the 4th, Bitcoin printing the 4.0, and then price trades up over 50%. So again, that signal was not accurate at all. It's very poor. It's very bad. However, it might have been a very good point in time to be looking at taking a look at the technicals and making sure we're able to stay on the right side. And then you could say over here in March 2024, signal was bang on and perfect. So out of 5 4.0 prints, 3 of them have been spot on. 2 of them have been off by 5x and then a 50% return. So that's not a signal that I want to use personally, but it is an awareness point that you could say, all right, now might be the time to dig in and look what's going on with the technicals. I wanted to take a look, and I know I'm on the 3-day. I'm going to move over in a second, and I'm going to look at the daily, but we're going to begin getting into the session right now. And I'm looking at what happened over here. So I guess I should be on the daily, but I want to observe the 3-day first. I'm looking for any type of divergence that's occurring. And I guess I could say over here, there was the first sign of divergence occurring over here. You can see the lower high on the RSI. This is the 3-day. I'm just playing for a second here. And then I could say that, and you can see price was making the higher high, right? But price after that divergence, it continued to go up. So maybe like the 4.0 print, when you see the divergence, that could be a good time to lean into the technicals, and we'll get into the technicals in a second. Maybe, maybe not. And I'm going to come down to the daily, but I just want to finish playing around first. What about that trend line break on the RSI over here? That's a pretty good signal. But, well, I'll leave that on there. Well, or we'll have to come back to it if I go off to the daily in a second. So over here, that's an equal high. I guess that's the beginning of a divergence. Let's get a little bit more accurate. Let's move on to the daily. Let me see what that looks like on the daily, first of all. So in the daily now, I'm going to come down over here. That looked good on the 3-day. That was probably just lucky. Probably just lucky. Hold on. I meant to delete this, not the indicator. Let's take a look and look for divergence. I'm trying to do what other people do. We're going to do what we do in 1 second. That was a clip from it's like a 17-minute video out on Twitter, and I have it bookmarked. So if you tag me inside the Discord, I'll post that for sure. I don't know if I'll remember otherwise. Let me focus in and dial in over here, and I'm looking at when divergence first takes place on the daily time frame RSI, and we got some pretty big divergence occurring over here into February. Again, that's a good time to get aware that something might be happening, but it might be a little bit late. Okay, let's focus over here first. We're focusing in on what was then known as the Wyckoff distribution that everyone afterwards spoke about. Now, we did okay on this, okay, in so much as that at this point, I was looking for price to pull back and rip up over here. And when it didn't rip up, and when it didn't make a V, right here, Friday, live stream, $50,000, 50,000 or 51,000, said something's wrong here. That's not right. Everyone get neutral. There it is. This Friday over here. Let me jump over here, and I'm going to pull this chart over so we could take a look at it next to it. And I have 3 different things on here because I was just getting ready, so I'm going to get rid of some. I'm going to first start with our tried and true BTC 107. Let me delete this over here. I know what we're looking at from the other area. And what I want to point out is the divergence that takes place with our indicators. So let's do this. Let me get some real estate going over here. All right. So we're focused in, and this is the 8-hour time frame. Look at the difference here. You ready? This is on the 3-day. Wow. How many people might be happy with like a 1,400% return and a 34% drawdown? But this is for the 8-hour time frame. 290,000% return with a 16% drawdown. Let's go. All right, let me jump over and take a look at that particular period over here. We're looking at into February, March, April, and May of 2021. We want to take a look at what was going on in that area. So we looked at the divergence that took place on the RSI. A lot of people look for RSI divergence, and you can see it continued over here. Higher high, lower high, and then over here you saw ultimately the last lower high and another one, except price made the higher high right there. That's interesting. Price made the lower high and RSI making the lower high with it. Was that the time to attack? Here you can look at what's going on with the CTM deviations. I'm looking at the red deviation, which is the sell side deviation over here. And you can see that the first deviation comes in right over here, actually right where the RSI came in as well. So that's not any type of benefit. It's the same exact signal. It's the same exact signal with the lower high. It's a little clearer, but the lower highs with the higher highs all in play. So of no benefit whatsoever. I thought it was going to be. But let me take a look at one more before we say that that's no benefit and get into what will be a benefit. So I want to bring on the daily now. And I'll come to the daily. All right, so same area over here. Let me just come over to that one area over here. And this is the daily now. And we have this time, we don't have any, we have price making a higher high and the deviation making a higher high. So the first one comes in over here. So this one's actually a little bit more accurate. I don't know if that helps us or not. What happened in November 2021? So in November 2021, October and November, we had another actually spot on divergence with a lower high and a higher high right on time. What was the RSI doing at that particular point over here? Same thing over here. The RSI is giving the same exact signal with price making the higher high and this making the lower high. When the divergence comes, and there's no benefit that I see over here to using CTM deviations or using the RSI. Let's check one more in 2017. But I guess before we do, we have the top in July to June 2019, and there's no divergence taking place. And then the hot top over here in no divergence taking place. What about from here? So here we have no divergence. We have both making higher highs. And on the RSI at the same thing, we have a divergence. So the RSI is offering a more clear and más bueno signal over here. I guess what I'm getting into right now is I'm wondering when that divergence is made. And I'm going to rule out now this CTM deviations, which at times show it, and say that the RSI is actually just on point. You know, why not go with the RSI? And I'm going to point out when that's happening, right? We have the 4.0 signal of value days destroyed hitting 4.0, but we know at that point that's early. Now, when it hits, it might be a good time to do what we're going to do now when the RSI divergence shows. As soon as that hits, we could be lining up when we get a technical breakdown, and that might provide a decent signal as well. It might even provide a better signal for certain occasions, like in March. Although I have to say that we caught the technical breakdown. It didn't happen in March. It happened all the way into June or July, and we were right there, right on time. But let's take a look over here. Let me jump down and come down to some daily candles. And let's say that, okay, here's the first time. Well, I guess over here we kind of had a divergence occurring, didn't we? It's an equal high. Over here we had a divergence. So it gets confusing. Like, what happens if you saw this bearish divergence occur? Price making the higher high. Hey, Bitcoin's trading at $5,000. It's trading at 5,000, and you saw a rare 4.0 print over here, highly accurate, and it's saying at 5,000 you should sell your Bitcoin. And you look over here and you're like, oof, same thing. I see bearish divergence. And then I see over here, I'm like, look at that. That's a technical breakdown. Selling my Bitcoin at 4,500. You wouldn't be the only one. Like, this is where Raul sold his Bitcoin. This is where Raul sold his Bitcoin, right? You know, a lot of people thought Bitcoin had come really far, really quick, and they thought it was over. That could be a little bit dangerous. So you need to have a plan to get back in if you're doing that. That's for sure. But I'm going to just revert over here and look at the things that we just looked at from some CTMIs. And I'm going to look at it through the Bitcoin bull runs. So, because ultimately, I think the best chance you have of capturing the highest price point of a pullback. Let me specify very clearly right here. There's no point in time at which you know whether or not the cycle top is occurring and or if it's nothing more than a mid-cycle dip before a higher high coming. At no point in time could you actually be assured of what's happening. You could have very good awareness and you could have a very good idea of what is happening, and likely maybe you'll be right. Likely you'll be right. Usually a lot of people catch up afterwards. If you remember what happened in November, it really wasn't until like Bitcoin was trading below 35,000 that people started saying, oh, you know, Bitcoin off 50%, it's over. I want to be able to give a highly accurate view of where we could look from a technical standpoint, technical breakdowns of when the high's coming in. Before we get there, let's take a look at these particular periods, what Bitcoin bull runs was doing. And the exit here is at like $48,000, $49,000. And it's pretty spot on. It's exactly what we did, right? From a discretionary technical point of that awareness point. And then you could fast forward over to here and getting out at 53,000. It's pretty good. It's got out where we got out as well on the first breakdown, except it didn't do a good job of being able to navigate this pocket over here, what we called the second wave, right? Now it's out of here all along and does a fantastic job, obviously, since. And you can see over here, did a good job at 64,000 getting out right ahead of that major drawdown, in and out, in and out. And then it's currently holding. What about, let's just rewind a little bit. Doing a very good job escaping the lockdowns over here. The exit over here was okay. It's a little late. I don't think it's the best. The exit over here, September 2019. I don't know how much better it could have been. And that's just, it's very hard. I suppose this would be the earliest exit. It's the same exit though. It's the same exit. And not only that, if you were to do that and then price kicked up over here, don't you have FOMO that it's going to be ticking on higher? Let's look back at 2017, obviously avoiding the bear market once again, like a boss. And I think this is a poor exit. The exit, I mean, it's a lot better than 5,000, right? Not much better, 9,000. It's not really that good of an exit. It's not that good of an exit, right? It keeps you on the right side. What a trend line break gets you out at exactly the same price. It's a tough one. How do you know? It's a really tough one. This is very safe. Bitcoin bull runs since 2014 or 2012. 4.2 million. Win factor 17%. 20% max drawdown, holding an open trade 57% into profit. Who knows when that closes? I hope it doesn't close for a year or two. Could close sooner than that. But when that closes and this compounds, forget about it. It's very good, but I want to be able to, from a discretionary standpoint, be able to track when we have the exit. I think I need to look at a different slide. It'll be up here somewhere. Hold on one second. Let's let that load. Beautiful, beautiful, beautiful NASDAQ. I want to find one slide. Hold on one second. That's not the one. I want to get into this one next week. This is the one I'm looking for. So why are you looking at this, Jordan? This is something that CTM we did during the bear market. And we put in these purple slides over here. And this is, and I'm just going to go ahead and fix this 1 second. I left it up here off this peak. And I was like, that's the last trend line resistance we have until the bull market like is confirmed. CTM was like, no, it's not. It should be right over there. And the guys were like, and I was like, you're like, that's earlier. And that's correct. I was going to go ahead and just finish. It's the same angle for each one. And you can see that this is 2017 top. Here's where the bull market begins. And then over here, you have the light one. So hold on 1 second. Like that's earlier. No, that's confirmed. And I think this is the one like this. And maybe you can see it better here. I don't know. It looks better to me like this. However it was, I have that slide somewhere. CTM was like, oh no, Jordan, you got to do this for this one. And that was highly accurate. And then it got me thinking about, well, okay, that confirms when we see the breakout, like the last bit of resistance, trendline resistance before the new cycle top. And that does occur a little bit before. The 0.786 retracement fib, like cycle awareness in the past, every time we broke above the 0.786 retracement fib, price has not only stayed above, but then moon past it. And you can see it in this cycle as well. A bit of consolidation and gone. This one just clean gone. This one, a lot of consolidation and now going. But the trend lines that we drew are earlier than that. Like the idea is to be as early as possible. Now, no doubt our underbelly work is probably the earliest confirmed that you could look at. I guess while that loads, I'll come back over here. And then CTM got me thinking about moving the green line is the earliest confirmation that we're seeing. And then I tried to find a mechanical approach about like when price makes a lower low, about like off of the high then. Like here's a lower low, you come off the high. Price makes the lower low, you put this down to the high. Price makes a lower low, you put this down to the high. Price makes a lower low, you put this down to the high. Price, is it making a lower low? Yeah, it makes a lower low. You put this down to the high. That's the earliest and quickest trend line break for it to going up. Does it work every time? I mean, we're free balling here, right? So here's the lower low. Price is off of over here. Price makes a lower low. You're off the local high. Off the lower low. You're off the local high. The lower low is not made to here. Price comes off the high. So I guess this one is a lower low than here. Again, I'm free balling. I don't know what. There's the lowest low or the earliest opportunity, and then similar thing over here to get to this one. Let's check it out. So here's price making the lower high. Price makes the lower low over here. It moves down to here. Price makes the lower low over here. It stays where it is because it doesn't move. Here's the next local high. As soon as we make the low down here, that's moved down off of there. And then I mean, I don't know if that's where it should be. This gets a little fuzzy. Price makes a lower low down over here. Are you then moving it to here? It's not the best. It's not the cleanest trigger, but I think that's authentic about how it should work. And I kind of just like where I placed it here originally. But yeah, that's more authentic. I have to figure that out. Anyway, so that's like on the reverse side. This is like for a number go up, how to like get the last outer trend line resistance and then get the earliest. And the green line is the earliest. Could we do that in reverse? Because we're talking about tops here and how to stay on the right side. And, well, hold on 1 second. Give me 1 second. Let me do two things. So first thing I'm going to do, oops. Just change this color. And then I'm going to just revert the angle like this. Right? So that liberal here, but I'm just reversing the angle from, is that the same thing? I'm trying to, let's see, maybe I could go exact by going like this. I think that's as close as I could get it to being right. I just basically went off the left over here to the high, and then on the bottom one, I came off the right, and that's pretty good. So, I mean, I don't need to invert the chart. I need to take this now. I'm going to clean these lines up. Big shout out to Matty H. Great to see you back over here. All right, so let's go ahead and take a look at, well, the famous July 2021 top. I'm going to go ahead and free ball it like this and do the reverse. Every time price makes a higher high, I'm going to set it off the low, right? So price makes the higher high, it's off the low. Price makes the higher high over here, it's off of the low. Price makes a higher high over here, it's off of the low. Price makes a higher high over here, and you're out. Boom. When you're out, what happens? You need to be able to hold on 1 second. Stay with me. Get back in. So I exit there. I put one over here. All right. Re-entry. Boom. We're back in it. Let's see how this goes. There's the low. Price makes the higher high. See, I don't know if I like this business at all because there's an exit right here. 4,000. Exiting with our roll. Put it back in. Re-entry. 4,600. Let's see how this goes up to the top. So higher high. Again, the daily here, this doesn't work. Maybe we try the 3-day next. All right. Here's the breakdown. You'd have to get back in like this. I don't like that in and out business whatsoever. I'm looking to hold. Bitcoin bull runs has the advantage there, but that exit wasn't any good. Here's the lower high. Here's the lower high. That's a much better exit, 15,400. You don't ever get back in until the breakout over here. or we did the walking it down actually, and over here. That's not bad. I mean, I might spend time with that to try to get something that I might need to manually backtest that to see what the performance is. Let me just have a little bit of fun with you. Dennis, that came from a Twitter tweet, and I have it. I don't have it right here right now though. Yeah, 100% agree. Too much in and out, but the final exit is good. But what I will do though, and this will be a follow-up for our next Bitcoin video is, well, let me backtest it to see what the performance is, compare that to the performance of BTC Bull Run, and then compare it to the performance of our trading weapons. And let's see which offers the highest potential profit. That's what I'm interested in, the data, you know, at the end of the day. But let me just go ahead and just try this fun one more time using this over here. So price makes the high. This is off of the low right over here. Price makes a new high. It stays over here until we get to here. Price moves off of the low, stays here until we move over here. Price stays off the low, stays here to here. Price moves off the low, stays there until we get here, then moves up like that. Stays there until we get to there. Right there, we get an exit. Back in. Let's see if we get any more exits. So right there too, you get another exit. Daily or 3 days, the same thing. I don't think this is a pullback here. I would go over here. Wait. That's not a pullback. And the ultimate exit, because you don't make a higher high here, is way lower, 8,300. So that doesn't work at all. It would have to be on the daily. Nah, thank you all for all of you and the community you bring, and for being here, putting the work in, and absolutely wondrous stuff. I lost my work. There it is. So I'll have to do it on the daily time frame. I'm going to really get into it. As I'm doing that on the daily time frame, I'm going to pull up my lab work, what we presented a year ago with the angle degree. I'll do that also on the 8-hour time frame. We'll manually backtest just this one period here, and we'll see what's the best performer. Is it this business? Is it Bitcoin bull runs? Or is it our trading? And then from there, whatever winds up being the top contenders, then we'll look at other periods, and we'll go like that. Look, like there's no quick answers, and there's nothing easy about it. What's the chicken tracks showing for upside targets? Let's look at that. And I'm so tempted. I want to get into my chicken scratch over here, but I know that I have to break this down and rewind everything and show everyone how we got here. Otherwise, they'll just look at it and not understand. So gearing up for that next week. Let's take a look at where we are as far as upside targets, though. And right now with Bitcoin, 101, Bitcoin $101,000 in the past. Doesn't mean it'll happen again, but in the past, when Bitcoin had the shakeout and then the bakeout. Oh, over here, there was a big shakeout and then a small shakeout. But once the high of the big shakeout was taken out, yep, there was even some more. That's not a small pullback. That's a 15% pullback over here, you know? So lots of leveraged longs being smacked around. Lots of leveraged shorts then picking up, getting smacked around. And we'll see when we take out the high over here at 1/4 if we get a nice run, or at least if then 92 becomes the floor for a while. I'll look at those upside targets in 1 second, but I was talking about 92 right over here. 92, 92, 92, 92. It could be until early 2026 at the earliest if 92 becomes the floor, that it's revisited for a while. Interesting. As far as upside price targets, I'm just going to go ahead and come to the daily time frame. And I just want to show you the yellow one is, I think, where we're targeting. So I'm looking at resistance, resistance, resistance. Debatable whether or not it comes down to here. You know, I don't want to be off by a couple of $1,000. But from afar, I had it over here of where price came into resistance. That is very high from where we are right now. But again, the one below us is this yellow one. So hold on over there. So same concept. I was looking at where we really peaked into resistance. This is coming back into February 2022. Now it could be up a little higher, but I think this is the first big resistance. And obviously there's nothing easy about it in so much as you have these wick downs. So below the yellow line, we have those wicks over here to deal with. And then I'm going to take this out then, and then I'll put them back. So where are they coming from? They come from this area over here all the way back in 2020. And they could be hit, but I don't think they're as important. Let me make them lighter. All right, and then we have this. This is resistance over here that's right in front of us. With that in mind, let's go back and look at real time and see what's ahead of us. And this is the big level, 134, right? Around that area, 132, sloping up to 135 by the end of the month. That I think is a really good place to be targeting. Now the wicks below came in, you know, over here. And that's 124 to 127, like upward sloping in there. This is contention. We get above this one, not the, hold on one second. We get above this one over here. I don't think these two become any type of resistance. So I think if we get above this line here, there's a good strong chance that we're then targeting into this zone over here. So there it is. Hypernova, where we're looking to target. Wow. All right, everyone, that's good for a fun Friday session, taking a look at what is developing, has it's taken place, and trying to do it with the greatest clarity possible. I don't want anyone to get confused or have expectations. We have ideas. Those ideas have a really strong track record. We have a really strong track record of staying on the right side, but that comes with being able to let go of what expectations are at any moment and stay on the right side. And we have even a better track record of slaying all this with mechanical solutions. Everyone, have a beautiful, beautiful day. Have a great weekend. I'll see you all on Monday. God bless you.